In the energy quadrant, crude oil declined 2% on the low. WTI contract getting down to about 57.32. Still staying below 57, although getting about 25 basis points of that move off of yesterday's close back, finishing down right around 1.75%. EIA was 1 day delayed from its normal Wednesday release, and it came out as a 292,000 barrel draw. That draw was expected to be a little higher than that. It was expected at 857,000 barrels. And the API number yesterday was a draw of 5.3 million. So it was really off, not only off of the expectations, but off of what was expected to be a sizable draw if you looked at the API figures, which were released yesterday afternoon. Gasoline showed a 2.2 million barrel build, which was a little bit of a surprise. The market was looking for a 528,000 barrel draw, but it wasn't that. That may come out in the holiday driving season, which took place on Monday, which wouldn't quite show up in these figures yet. So that may actually get washed away. Refinery demand was a little bit stronger, so that is representative of short-term demand. If that continued, you could see bigger draws in the coming weeks. It came out at about 91.2%. That's the first time up above 90 in the last 2 weeks. And U.S. production is up as well to 12.3 million barrels a day. The 4-week moving average had been pretty sturdy at about 12.2 million barrels a day, so up about 100,000 in U.S. energy or U.S. crude oil production. And natural gas also got hit pretty hard. You can't ignore that today. Down 3.25%, and the natural gas inventories built up by 114 billion cubic feet. An expectation was for 101 billion cubic feet, and the 5-year average for this time of year is 94 billion cubic feet. So a much stronger build, but the deficit only improved mildly by about 257,000 billion cubic feet is where the inventories of natural gas sits right now.